Good morning. What's up, guys? How we doing? Hope you're all having a good Monday morning here so far, and it is time to get to work. So, business first, as usual. We actually have a bit of a slower day as far as news here today. From here on, we have Trump is holding a presser right at market open with the health secretary, and then we have a Fed speaker at 9:25. That's pretty much it. So we are free and clear to trade as we please. It's always nice to have a slow news Monday, ease back in, assuming one thing is true. Volatility is good enough for us to trade, which means that ATR, that blue flag at the bottom of your screen, that is at least like 20. My minimum really is like 25, but between 25 and 70 is a beautiful thing. Below 25, I'll start leaning into negative reward to risk, which is no big deal. Below like 15, below 10 especially, it's time to walk away. But this is pre-market, so it's always going to be low, so we will see what this ends up being once the bell rings in 3 minutes. Good morning, guys. How we doing? Savant, welcome back. Exposed, good morning. Clinton, wrongly rightish. Corey, I appreciate the super sticker. I didn't know we had those. Chris, good morning. Michael, how we doing? Rich Life, welcome back. Old School, JM. Patel, Jude, good morning. How we doing? Lee, what's up, brother? Welcome back. TC, Rick, Day Trade Tom, Scrumptious, Tony. All the regulars. Back at it. Hey, Terry, Doug, John, Gibbs, how we doing? Lurfuse, good morning. Okay, so I gotta tell you, I'm excited to see where we end up here today. Obviously, the market is, it's up almost 4% here this morning, which, again, Mondays can kind of end up one of two ways. Well, Mondays can end up a lot of ways, but there's two, like, extremes, right? A lot of times, Mondays will be a slow ease-in kind of back day, and then Friday's kind of the ease-out day. For a lot of traders, just without even trying to do this, for a lot of traders, it ends up being that Tuesday, Wednesday, Thursday over the course of a year are your biggest days. Honestly, a lot of times Wednesday is your biggest day. Monday, Fridays are kind of your smallest days. Don't put that on yourself, by the way. Maybe I shouldn't have brought this up because I think this is a lot to do with psychology. Because Mondays, people are like, okay, time to ease in. I don't know if I want to start Monday off with a big red day, so let's just ease in. And then Fridays, obviously, is like I want to have a good weekend and the week green, whatever. So people hold off. But when you have an edge, as far as the math is concerned, you really shouldn't ever be holding off if your edge is presenting itself in the market, right? But you know what? If you find that you like to ease in Monday, ease out Friday, fine, do your thing. As long as you're making money, who cares? Lars, good morning. Maury, Keith, welcome back, guys. How we doing? Dale, good morning. All right, we got the opening bell here about 45 seconds out. Again, if you're just piling in here, slow news day relatively. Trump is holding a presser with the health secretary at 8:30, which is market open Central Time. Then we have a Fed speaker at 9:25, which in 2025, unless Fed speakers start going crazy with tariff headlines, really not all that big of a deal. 2022, for example, every Fed speaker, not Powell necessarily, every Fed speaker was moving the market in kind of a big way. Not anymore, unless they're bringing up tariffs again. Now, do I expect we'll get some tariff headlines from Trump at market open time when he's holding that presser? Honestly, I mean, it's impossible to say, right? But with the context of the meeting, I doubt it. Though, there's the opening bell. Though, you know, the way that the press is, they're probably going to try to weasel some kind of a tariff headline in there. All right, there is the opening bell. We will let these institutional orders, especially on a Monday, these orders have been waiting kind of all weekend, at least the ones waiting for the liquidity to execute here on the bell. So we'll let these guys go through, give it a few 2-minute bars, and then we'll start looking. I mean, goodness, though, market inertia-wise, if you look here, now again, this movement off the open, like a lot of people, if you're looking on like X or StockTwits or whatever, they're gonna say, oh, we're gonna bleed all day because we're dumping off the open. We could bleed all day, but it would have almost nothing to do with dumping off the open. This here is institutional orders, and where we go from here based on that first move, in my experience, is essentially 50-50. Sometimes you'll get a big dump off, and then you'll bleed all day, and they're like, look, see, we were right. No, I don't think that's necessarily related. Okay, now, market inertia-wise, let's take a look, because I need to figure this out for myself as well. We get a big gap up here today, of course. That's the new, this is just showing the New York session, bottom of your screen, right? That wide chart, that's a daily chart. Every candle represents one day, okay? So, well, I should say one New York session. No Globex included down there. Big gap up. The bar is growing a little bit based on this open here, which we're getting a lot of selling, probably profit taking from the institutions, which is fine. We'll see where this goes from here. But as far as the actual New York sessions, again, I can't look at this and start thinking, okay, trend day, because we haven't seen trend-like market inertia out of the New York session in well, maybe 2 weeks. And even then, I mean, even 2 weeks ago, it was like a day. And then before that, it was a lot of range-bound market. So I'm thinking range-bound market here today with potential of trend breakouts. Now, if the market did decide, like, hey, we're going to dump off and get back down, test 20K, we'd likely end up in a very strong bear trend, and I'd probably be hitting continuation multiple times today to the downside. But it has to set up for me to care. Okay, so I know some of you might be asking about that gap. Well, what about that gap? I don't care about the gap. Unless we get very close, within like 100 points or 200 points of even filling the gap. At that point, a lot of times the market will be like, well, we might as well see what's up down there. Can act like a magnet. But here, when we get a gap like this and everyone goes, all right, I'm getting short because we're going to fill that gap. Nothing at all says you have to fill the gap same day. I mean, look here. Look, right? Obviously, you know, this was that tariff time. But, I mean, it happens all the time. Eventually, the gaps tend to fill. But look, they don't have to fill same day. There's no obligation to do so at all. So, I'm not playing that gap on its own. I am playing the price action. So what's up with you guys? What are you trading here to start out the week? I know a lot of you guys were going from evals in to funded accounts. Some of you guys are trading personal accounts. But it's good. It's good to see. It's good to see you guys in the evals getting. And hey, listen, if you keep blowing evals or whatever, it's fine. It's no big deal. Eventually, clicks in the evals, you know, you stop caring as much. You figure out your business model. You figure out, hey, you know, I don't have to pass every single eval to make a bunch of money at this. As long as it works in your business model, whatever that might be, which I hope you have written out. You had 2 long days over the weekend to do so. A lot of you guys don't have it written out yet. Jane says, that's a fact. 93% of gaps fill. But that could be months or even years. Yeah, exactly. There's zero obligation to do so next day. Chris says, just a small guy trading his first 50K eval. Hey, listen. Trade your best. Whether you pass, whether you fail the eval, you learned a hell of a lesson for like 30 bucks. Hey, Marshall. Good morning. How we doing? Doug's on evals today. Scrumptious is trading a 25K funded account. Lee, personal, and my take profit trader. I think I may try Tradeify. Yeah, me too. Tradeify seems like a cool firm with the straight to funded. I was running some numbers on the Tradeify straight to funded. I gotta tell you, it seems like a pretty good deal, honestly. Chris, good morning. Aaron, trading evals, getting close to on the 150K. Keith is on a 25K funded, cool. Chris has got 5 evals, 5 funded going, cool guys. All right, so again, we are on the 3rd bar of the open here. I gotta let institutional orders clear. This is, you know, again, being up 4% nearly coming into the opening bell. This is probably a lot of profit taking. So I'm not taking a trade on this action. I can't. There's no setup here for me because as far as I mean, listen, put yourself in the shoes of like the entire market, okay? And think about this with a lot of different moving parts. If institutionals are waking up this morning and like, damn, you know, we positioned ourselves early last week, we should probably just pull this and get something on the books for our clients. I mean, they have a lot of money with, let's be real, relatively low expectations. Every firm is just trying to beat the market a little bit. If they can brag at the Christmas party to their clients, they beat the market, and they all come back with more money next year. So booking profits like this on a 4% up day when we've been flat for a week and a half, you're going to see that. Now, where we go once that's all done, I completely up in the air, which is why I have to wait for a setup to develop. I'm cool going long, I'm cool going short. I don't mind. Just give me the bars and I'll pop it on. Brandon, trading evals, taking it slow, getting edge and confidence. Yep. I think that's the way to go. Yeah, I mean, listen, the responsible thing would be probably for me to sit here and say, listen, guys, you know, trade for a year and a half in the simulator. But like, I'm just going to be straight up. Like, I can't do that. I wouldn't be able to do that. It's just not real enough. Like, I can sit there and make money and not care, but I also don't care when I lose. And that's good when you have edge to not care. But when you are trying to develop edge, if you don't care, you don't even care enough to like try to develop an edge. You just are going to gamble every day and see, oh, look, I made, you know, 20,000 paper money. It's not helpful. I think it just hurts and wastes people's time, which in my opinion, you know, if I'm going to sit here and set people up to waste a bunch of time in the simulator, to me, that's more irresponsible than, because the time is going to be more valuable than anything they could lose doing what I would say is the better option, which is trade in the sim and just figure everything out. Get your hotkey set, muscle memory, get it so that if something happens quickly, you know exactly what button to press, know your platform, and then either you can trade a personal account with one micro only, or even more ideally, so you're not paying as much like in commission and everything, and you know exactly what you have on the line as far as dollar-wise. It's probably cheaper anyway. Just trade like a cheap eval from like Apex or something. Just one, and trade one micro in the eval so you hold on to it. At least then you have like, you know, 16, 30, 50 bucks on the line, depending on what the deal was when you bought it. You have a little bit of money on the line, so it's actually real. I don't know. Everyone likes to say, well, you know, sit in the eval for 12 months. It's like, if I can't do that, well, it like psychological, I can't make sense of that. There has to be at least something that I've put into this where it's like, okay, I'm going to take this seriously, even if it's just $20. But take it slow. Respect the fact that you're going to have an edge to make this work, so you might as well start trying to get that from the get-go rather than just buying your first eval and putting on, you know, 17 minis and hoping you pass. Aaron, good morning. How we doing? Peter says, good morning. Sim trading actually hurt my psychology because I end up over-leveraging every time. Yeah, listen, you're sitting there, it's boring because you have nothing on the line at all, which is kind of the opposite of trading. You don't learn any psychological lessons, and it's really easy in the simulator to just sit there and go, yeah, let me take 100 minis and just see that big number on my screen. Who cares? And it teaches you bad habits, realistically. Okay, bulls attempting a little reversal sequence here. You see those two bear bodies, and then a reversal attempt bull doji. And now this next bar, you get a new high. All right, now where we go from here, this is one of those scenarios that we talk about a lot where, hey, if you're a bull who's trading really low probability, really high potential reward to risk, there you go. But don't miss what I said in the middle, very low probability. Because you'd be taking this trade early. Yeah, Biscuit, don't... I'll never message you first in Discord. This is the oldest trick in the book. Bunch of scammers pretend to be you and then, well, I guess pretend to be me or anybody else. And then tell you they have some crypto opportunity or something. I don't do anything in crypto. Lee, I learned my risk management the most when I started a personal account, and it was actually my money I was risking. Yeah. Yeah, it's a completely different ballgame. Vaz, good morning. Good morning. Okay, Bulls still trying that little reversal attempt here. Now we are into 841 territory, so maybe 2 more 2-minute bars and I'll seriously start looking here at putting something on. Because again, a lot of that profit taking, you can take 10, 15 minutes for the institutions to kind of clear up. Chris says, hey Nico, is it okay to share business model somewhere in Discord so others can see, comment on it? Yeah, listen, hey, that's what it's for. By the way, the Discord, it's 100% free. I don't charge anything. It's just a place to gather. It's in the description, by the way, if you want to join and talk. The more active you guys are in it, the more active I will be. But Chris, yeah, listen, that's what it's for. Share your business model, lay it down, and see. But at the end of the day, it's yours. Okay, if someone comes back and they're like, well, that's not what I would do. If it makes sense to you, run with it. All right, so we'll get the rollover of this 2-minute bar here in 50 seconds. Then that 845 is halfway through a 2-minute bar, so really on this next bar is when I'll start looking for setups in a serious manner. Yeah, Zach, I'm gonna run 40-40 to start the week here. ATR currently right around 30 points off the open. Now, a lot of that is coming from that opening profit-taking bar, so we'll see how that develops over time, over the next maybe 10, 15 minutes. STV, I think it's Steven says, good morning, I use paper trade to practice my setups. It's not about how much I make, but to train my eyes to see certain things. Yeah, exactly. Exactly. And then when it's time to start gathering data, I think just trading one micro, whether it's a personal account or trading an eval, I think is even better because it even more so limits your risk to what you paid for the eval. Is a good way to go because at least then you take the data collection process, which is the most important process in trading. You take it more seriously. Even if you take it seriously in a paper trading account, there's always that side of you that's like going to question the data because it wasn't really, you know what I mean? All right, well, we are more than free here to start putting on trades when the market gives us something nice here. So, Friday was kind of a crazy day. So, well, I wouldn't say it was a crazy day. We took 2 trades. The first trade on Friday was a loser. So what, right? Now, the second trade I put on, and for a minute there, I was like, okay, I guess we're going into the weekend, 7,000 in the red. I had a 40-point stop on Friday. If you were there, you know what I'm going to say. we got, I think it was 37 points in the red. Very high probability of getting stopped. And the market curled and went all the way back to break even. 20 points in the money, 30 points in the money, and hit my 40-point take profit. And that put us back to break even heading into the weekend. That was quite the movement on that second trade there on Friday. And by the way, that will happen to you. I promise that will happen. It'll happen to me on stream. But it will happen. Hope it doesn't happen today. It will happen where it gets 37, 38 points or whatever your profit take is. You know, 1 or 2 points away from your profit take and then curls and stops you out. That doesn't mean you managed it poorly, by the way. It just means it was one of those statistical anomalies where it does that. Maybe you make a note in your data. Maybe you just move on, whatever. But it's going to happen both ways. Just happened to happen in our favor on Friday. So when that happens to you, if it happens to you this week, this month, today, whatever, try not to worry about it. Try not to beat yourself up. You didn't mismanage if that was your plan, was to let it work. Market just happened to do that to you. It sucks, but it's the way it goes. This 5-minute chart, look at this, top left. Actually, we'll do it like this. That profit taking, that put it off a cliff, huh? Now again, where it goes from here, again, very important to understand, essentially 50-50. Once that profit taking mentality is kind of taken care of and the institutions can lock that in for the end of Q2 party and say, yep, we predicted a 4% pop in the Nasdaq, and their clients who don't really understand are like, wow, like, I'm with the right people here. So they've locked that in now. From here, you can see we're getting wicks. It's starting to become a little bit less decisive. Tubed out, good morning, how we doing? So I'm watching for any kind of potential descending support. However, it's very aggressive downside. You guys know the more aggressive, like the closer to vertical any kind of trend line gets, the less meaningful it is in my head. As well as flats. Flats are less meaningful because I know that the breaks are about 50-50 unless you're dealing with a wedge, whether it's like, let's say, a flat top and a descending support. In that case, the flat top usually has a slightly higher probability of a break-in. But in this case, I'm watching for this potential little descending support. Now, not to buy that, right? That's probably too low probability to give me any kind of edge and offer me any kind of value. So what I'm really watching here, and you can see we're kind of maybe forming that descending support, flat top. What I'm really watching here is to see if can we get a rollover and a continuation setup with room to any kind of argument. And I would short that. Now also if we get a reversal sequence, like 3 consecutive growing bull bodies with a nice clean entry bar close, I'll take that as well. Again, as long as, you guys know what I'm going to say, as long as the psychological level, the 5-minute 20 EMA isn't like immediately in the way upon that giving me an entry. So, is Trump still not speaking? He was scheduled for 8:30. So again, Trump is holding a presser with, I believe, the health secretary. Then we have a Fed speaker at 9:25. Usually Fed speakers are very on time, by the way. But I don't expect too much movement out of the Fed speaker. It's not Powell. So we might get tariff headlines. But those seem to be, I don't want to speak too soon, they seem to be smoothing out very slowly but surely. Still, when we get China talks, there's big wicks. Now remember here, tomorrow morning is CPI day, okay? So that hits 1 hour before the bell. But we'll worry about that. I suppose, at the end of the stream. And then tomorrow morning, we'll see what we got. See if these bulls can put together a bit of a sequence here. They're succeeding a little bit here in the reversal so far. Again, just goes to show that a lot of that dump off the open was a profit-taking mentality. I mean, it just makes sense, right? Listen, guys, if there's anything in trading futures that has proved to me to be true, it's that really this market more than anything. Because with stocks, like with trading, with swing trading stocks especially, which I'm not really a fan of unless I'm net short an option strategy, but just holding shares or like buying calls for a week out and then waiting 3 days. The CEO can wake up one morning and just say, yeah, let's announce this news. And how the hell are you supposed to know if that's coming? You won't. But in the futures market, it's really bigger than any one participant, which is a good thing. So the one thing that has proven to make sense to me with trading futures, that I think if you internalize it will improve your performance, is that does whatever you're doing make sense when you look at all the factors? Those factors being market inertia, right, the daily chart. What's this market been doing lately? Ranging or trending? Breaking out or failing at breaking out? Failed breakouts are going to be wicks on the daily chart. Successful breakouts are going to be big bodies on the daily chart, right? That tells you kind of like, hey, what's the inertia? And then you want to look at very obvious trend lines. Hey, does everyone see this? Am I getting long right ahead of somewhere where every single bull and bear on the planet is looking at this like, well, we're probably going to see some resistance here. And then every algorithm is like, yeah, humans are probably going to see some resistance here, so let's hold off. No, you wouldn't want to do that, right? You want room to hit your profit target as clear as possible. It's never going to be perfect, maybe sometimes. And ideally, if you can find an obvious place where there's some stop losses, right? All right, 45 seconds until the close of this 2-minute bar. If you can find somewhere with some stop losses to help you get pushed to target, stop hunting mentality, you mix that in with a nice clean setup and that helps. All right, well here. So I'm looking at this. There is room, believe it or not. Okay, I am interested. Let's see if we get a nice clean close. Now again, we're coming right into the 2-minute 20 EMA. I don't mind too much if we get a clean close. I don't want to see a wick back. Here comes the rollover. All right, I'll give this 15 seconds. There we go, and I'll get long there. Average price is 20,831. Make sure I'm filled. We are good. Stop loss down to 20,791. Take profit up at 20,871. Currently 15 points in the money. 18 points in the money. So take profit at 871. We have room right ahead of the 20 EMA on the 5. Again, that made sense, right? So now I just accept the outcome. Put the trade on, accept the outcome. 6 points in the green. See if these bulls can crack back above that 20 on the 2. Again, less relevant. The 2-minute chart is not an extremely heavily watched chart like the 5-minute. So for context, just so you guys kind of understand my thought process here, had that 20 EMA that we were running into literally while I put that trade on, if that was on the 5-minute chart, I would not have put that trade on. But it was on the 2-minute, so I'm cool with that. All right, currently about 15 points in the red. See if the bulls can push this back up, get a push up toward 20,871. All right, getting a big push downside here. Again, stop is at 27.91. All right, we are moving downside here. Pretty likely that we end up getting stopped out here to start the day. Let's see what we get. Yeah, we will. That'll hit us out there. So we're down 1R to start off the day. You know, I wouldn't even say that was a rejection off the 20 on the 2. Because we got a nice strong push. That put us 20 points in the money before it faded. So I'm cool with that. All right, let's see what else we can grab here. Yeah, now as far as news, we have a Fed speaker at 9:25, which is really in like half an hour. So I'm not too concerned about any headlines coming out from that Fed speaker. That's about it though as far as news. Pretty clean as far as news. Okay. Yeah, I like that setup. That was a relatively clean setup. Again, you get this like little small bar in the middle in a 3-bar sequence. You guys will oftentimes see me, that's okay. Now, is it better to see these bars like flip-flopped, the 1 and 2 flip-flopped? Yeah, I'd probably prefer that if it were up to me, but these are setups that I can put on all the time. Again, it pushed us like 20 points, 18 points in the money and then faded hard. So I'm cool with that. All right. Mr. Anonymous, does Take Profit Trader tell you schedule news events? Is CPI a news event? Yeah, they send you emails, and CPI is, I believe. I think I got an email, actually. I'll double check for you. CPI, I mean, it should be. Yeah, it is. So no trading during CPI here. Tomorrow morning. Again, that's 1 hour before the bell. So if you've got some Take Profit Pro accounts, do not trade at 7:30 or the minutes surrounding 7:30. All right, so okay. So that's interesting. That I think what we were looking at there is when you get a strong bull bar like that, I'm willing to bet against the 50% retracement. But as we got a harder push, I think we saw some bulls who were averaging down this morning start to take profits. I talk about that 50% retracement a lot. And again, I'll challenge it if we get a strong close for continuation like we did. But I think we ended up seeing the bulls who were averaging down just start selling hard into that move. And then maybe on that red bar that followed the entry bar. I mean, if we think about, well, what makes sense here? Well, as bulls start taking profits as we pop up through here, right? Maybe you end up seeing a fade and then bulls kind of rushing to get out because they're like, oh goodness, we're dropping. So maybe that's what we saw. Just thinking out loud. Okay, now, what I'm considering here is the next few bars are going to be very telling. As it sits right now, we really have two scenarios, right? Either we curl downside and take out those lows, which I would be interested in putting on a short continuation trade on, or we end up bouncing here and putting in a little ascending channel, which I'd also be cool trading. But I have to let it develop first. Interesting. We're getting some wicks back upside. We'll see if this bar ends up being a clean close. We got 60 seconds out until the close of this 2-minute bar. And I gotta tell you, if this one ends up closing clean, we've got the low of day. Try to take out a whole bunch of stops. Now, I don't want this bar growing too much, okay? But that would be a continuation with a stop hunting mentality for me, but only if we see a clean close here. If we see a wick back up close, not interested. So I do have to get ready just in case. And I would need to see a close kind of down toward 765 or lower. We've got 10 seconds. This is turning more into a doji than anything, huh? Yep, there is the rollover there. Gotta hold off. Yeah, Chris, exactly. I was looking for that 3-sequence bear continuation setup. Didn't give it to us, but that would have been a very clean, well, I shouldn't say a very clean, that would have been a relatively clean stop hunting trade for me that I would have had to put on, yeah, but we didn't get it. Okay, now, for me, well, we only have 25 seconds left on this bar, but for me, when you get that little bull doji like we saw in the last bar, what I'm saying is really only relevant if this one were to close down in a bear bar. But either way, when you see a doji breaking up a sequence like that, I would still have to see 2 additional bars for me to take an entry. Yeah, we are going to close in a bear bar. Okay, good. All right, now what we would have to see here for me to put it on, it would have to close right in a window. I would need to see it close between the low of this candle and the low of this candle, right in this window here. That's what, maybe a 15-point range? If we can see a close, and it would have to be at or very near the low of this bar, by the way, right in this region. Then I'd sell the rollover. We have a minute and 25 left to see if we get that. Mr. V, good morning, what's up? Well, Bull's holding on here. We got about 50 seconds till the close of this 2-minute bar. Yeah, Bulls really want to turn this into a little channel, don't they? All right, looks like we're gonna get a big old bull bar here. Kind of break up any sequence, any hope at a sequence that we had going. Let's see if this turns into a channel. Tell you what, don't go anywhere. I'll be back in a few minutes. All right. See if we can get this turned into a nice little continuation sequence. Again, I would need to see a third bull bar pushing up and closing at the high. And I'll tell you, I wouldn't put this one here on because you have that 20 EMA on the 5 minute about 20 points away. So what that really means for us is this next 2 minute bar, which rolls over here in 8 seconds, needs to be at least 20 points in range, which has not been a problem thus far. Let's see if we get that again, because I would need it to close above the 20 on the 5. So if we can get a nice close on this 2 minute bar, I would say at, well, honestly, ideally like 860 or higher, but not much higher than that. Then I would put this on. Let's see if we can get that. Minute 30 out. Zach, do you wait for a pullback when you buy or sell the close, or just buy, sell right at bar close price? If I'm ever waiting for a pullback, it's because we saw a pop on the rollover. So that's when I'll say, okay, I'm going to give this 15 or 30 seconds, and then I try to get a pullback to or slightly deeper than the close of the previous bar because I kind of missed the entry. That's when I'll wait. All right. But ideally, I would just sell the immediate rollover. But again, sometimes, you know, like on a bull sequence, here, I'll show you. Like if this were a sequence that I would have put on, sometimes you'll get a rollover and in the first half second, you're already up here. I don't like to put that on just because I feel like we're tempting, because a lot of times what I've seen is you end up seeing a pullback at least inside of the previous bar at some point, and I feel like I'm not getting a good price anymore when that happens. I don't know. In my experience, it seems to lower the probability when I get a bad fill like that, paying more than I really intended. Oh, well, we've got 10 seconds left on this bar, so if we get a rollover here, assuming this bar stays green. All right, and it will. We actually got a decent close on that bar for a setup on the following, which is this bar now. Okay, so same plan here. If we can get a close at about 860 or a little higher, then I'll buy the rollover and see what we can get out of a push, because that would have to be, again, I'm looking here, right? We're testing the 5 minute 20 EMA, which is heavily watched. So we've got a minute 30. Let's see what we get. Bears stepping in right ahead of that 20 EMA on the 5 minute chart. That's what we're rejecting off of right now. All right, 20 seconds until the rollover. I really want to see this bar hold green. If it can't, that kind of shoots our immediate setup in the foot a bit. Yeah, there we are, pulling back right into the rollover. All right, there's the rollover of the 2 minute bar. Well, this could very well develop a channel. Let's see. Fear and Greed Index just hit. Again, not much we can do with that information, but it's 67 out of 100, indicating greed, which is interesting. A couple of weeks ago, that was, I think, 9. in extreme fear. Okay, well, let's take a look at this. Yeah, Chris, you're exactly right. I'm kind of watching. There's a few ways you could draw this, okay? You could draw it like this. I wouldn't trade it. It's too aggressive for my taste. So I would probably end up drawing it like, honestly, like that. You can make the argument, well, we should probably draw it like this, right? I would split the difference and draw it like this, just to be in the middle. Again, I want as many eyeballs as possible. But I would really only call that maybe two and a half touch points. So I'd want to see one more test before just putting a trade on there. So, see what we develop. Vinny, good morning. How we doing? Well, you know, the bright side here of today, again, we have a Fed speaker here in about 4.5 minutes, but the bright side here today is that the market's up 3 1/3%, and we're not anywhere near 20K. So what we were dealing with last week, which was, maybe we'll deal with it later on this week, which was a lot of break-even trading on the day, right? The Nasdaq, that is. I think the Nasdaq was break-even a lot on the day, and that break-even point for the Nasdaq tends to be a bit of a hang-up. And 20K, an S-tier level. So we don't have to deal with that too much here today, but I want to see the test of that trend line. No, I gotta tell you, for me, my ideal scenario here really would be to see a nice low close out of this bear bar, a rollover, and a nice low close out of the next bear bar. Because then I can sell with a bunch of stop losses to help use as rocket fuel to push me into new lows and toward target. Whereas, you know, if we hold this, that's fine. But then I have to wait for a push and then a retest. And I'm always interested in, I don't care what the market does. I'm just interested in, hey, what scenario would give me a setup the quickest? That's what I want to happen. So ideally, I'd love to see this bar break downside through this potential trend line, which really is not set in stone yet, and close like in this region. But we got a minute 40 to make that happen. Let's see if we can. Well, the bulls are watching that. They're bouncing it up off that that ascending trend line. So really, I'd like to see us break that little flat top there and then pull on back for another test. That would take. There's the retest there. That's a mushy bounce. I'm not into that. It's a mushy single bar bounce, next bar retest. You see, we kind of got the test, bounce, and retest all in 2 bars. Those previous moves were a lot smoother. So when this kind of scenario presents itself, rather than buying the trend line, which may end up being the right decision, I'm just talking probability-wise, rather than buying the trend line, I am much more inclined to wait to see, hey, do we end up breaking downside and getting a couple of consecutive bear bars that I can take continuation and take out those stops at the low. Here, here, and here. We're already testing that. Let's see if we can get a rollover and then a push down that I could enter on. 2 bars here would be enough for me with this kind of setup on the way. Meaning those stops, right? So in the next 13 seconds, I'd love to see this bar close beneath that trend line, give us a nice rollover, maybe a retest, hard push down. Closing like right here would be ideal. That'd be a beautiful setup. All right, well, we got that. We closed inside of the trend line, rolling over now below. Already saw a little retest at 20,008, which is that's a tier 3 level, which I'm not too concerned with. See what I mean? That's very common. Let's see if we can get a nice close. We got a minute 35. All right. Fed speaker is speaking. A few tariff headlines. I assume they're going to start with tariffs here. But we already got those. It says tariffs are likely to lead to slower growth and higher inflation. Uncertainty around tariffs has already impacted the economy. All right, good. Get those out of the way. All right, now don't calm down, bears. We got 60 seconds. I don't want to see this bar grow really much at all anymore. So a nice close inside of this wick. This wick here would be ideal for me. Just adds to my stop inventory to hunt. Can't see a wick up though on the close. This is, I'm picky about this one because we really only have 2. I can't see it grow too much. I'm going to be picky about this setup, rightfully so. 30 seconds out. Plenty of stops in this region. Let's see if we can get a nice... Well, there's the attempt taking out these guys. And this can't grow too much. I'm getting a wick back a little bit here. I'm gonna give it 15 seconds here for a bit of a retest. Currently sitting flat. We got about 5 seconds. That's a big push. Yeah, there we are, taking out the stops. No trade for me there, unfortunately. Kind of ran away quick. That's all right. All right, we got a minute 24. Now, since those stops are gone, I'd expect the bulls to at least try. You can see they kind of did just step in and try. We got a minute 15 left on this 2-minute bar. Similar idea, though now I don't necessarily have those stop losses in my favor, which is, you know, fine, not great. I prefer to always have some stops that I can hunt, but those are now gone. So let's see what happens on this bar. Again, I'm still open to the trade. All right, 45 seconds out. See that bulls trying to wick this back up. With the power of the stops gone, they're going to get a few wicks, but it's a matter of do they succeed or not. That's up in the air, but they're definitely going to try. All right, 20 seconds. I will get ready just in case I can put this on. I see a nice close in the mid-20s, at least. Gotta cover that wick. Oh, a big wick back upside, half the bar. No trade for me there. Again, similar idea here. Just waiting for my clean entry. All right, we got a minute 20. All right, bears, calm down. Calm down. I don't want to see this bar get too big compared to the rest of the setup here, right? I want it to be reasonable. I don't want the bulls to really have too much to look at all. And having a bar that's too big gets the contrarians going. So this is reasonable here. We got 50 seconds, but I don't want to see this bar, you know, dump down to 680. All right, bears, calm. We got 25 seconds out. $690 is the low. Let's see how this closes. If it's clean, I'll put it on. But any further into the mid to low 680s, and I'm gonna have to hold off. 5 seconds. Bulls wicking this baby back up. Yeah, we're getting a lot of that. No trade for me. You see this? We're getting wicks. Pushes, wick back up. Pushes. I mean, it's covering nearly half these bars. So bulls are trying to just time that bottom. Now, this is the time where a lot of times you'll see an attempt at a bullish reversal. Doesn't mean they're going to succeed. But, you know, it wouldn't surprise me if we ended up seeing like a doji, maybe a small green doji bar. And then that next bar, you cover the wick high of the previous bar. And then from there, it's up in the air again. Well, that ATR is at 34, which is good. That's a good place for ATR to be sitting here. Yeah, you know, this setup, I like this setup a lot. This rollover, we got a rollover and a big push. And we just never pulled on back. Which is fine. There's going to be those trades that just, you know, your little entry window is already tight. This entry window here was maybe quarter second. And even then, I think had I hit the button, I probably would have gotten filled somewhere down here. So, it's all right. Let's move on. Now, in this state of the move, which, you know, there's always like different little periods during the day that always kind of repeat themselves. Really during every day. When you get a big downside move like that, again, it's very common to see when the market inertia has been lately, like, hey, the bodies have been a lot of ranging. We'll see if that shifts here today. But after you get a push like that, it's not uncommon to see this flatten out for, you know, 10 or 20 minutes, which can end up forming a little channel. Or if it just goes straight sideways, then that's kind of our worst case scenario because that doesn't offer much. But let's see here. Gang says, Nico, why do you put on the daily chart instead of running the 15, 5, and 2 since you are in trades for less than 5 minutes mostly? Yeah, right. So I put on the 2-minute upper right, the 5-minute upper left, and then the daily on the bottom. I have the daily for market inertia. I need to understand what the New York session has been doing. Have we been seeing successful breakouts more than usual? In an average market, something like 80%, maybe slightly higher, of breakouts are going to fail. Has that been more than usual as of late? Small bodies, a lot of wicks on the daily chart is what that tells us. Or has it been the opposite? Have we been seeing a trend market? I need to understand what the New York session, how it's been acting. What is the market inertia? That's why. And then as far as like, well, why don't you also watch the 15 or the day, or I'm sorry, or the hourly or the 4 hour? I think there's diminishing returns once you start going over watching 2 time frames. So I have the super popular 5-minute up, and then I trade off the 2 minutes. So I got to have that up. All right, well, we were just heading sideways here, so we got to see a break in one way or the other. Volatility here is just kind of diving in this little sideways channel. I don't imagine this will last all that long. I expect us probably to break and return to decent volatility here. But when you see these little flat bottom, flat top-ish, I mean, close enough, right, channels, this 50-50 here. You gotta just let it break and then find a trade after the fact. Yep, a few Trump headlines hitting. He says China tariffs will go up without a deal. China tariffs won't go back up all the way to 145%. And then he says about China, I think we'll have a deal. All right, there's the attempted break out of that little sideways channel. Let's see if the bulls can maintain that. I'd probably prefer to see us break downside, but at the end of the day, I really don't care. All right. Okay, 20 EMA on the 5-minute chart is at 812. So, being a reversal sequence, I would need to see 3 consecutive bull bars for an entry here. There's really no immediate hope of a descending resistance. Now, being this big, here, you look at this. Downside push kind of throughout the day, really. I mean, you get obviously this little move and then a push down. If I were going to trade a channel, I would need either a new one to develop here, or if I was going to trade a bigger channel, I would really need there to be some kind of hope at a descending resistance, which we haven't put in enough touch points for that to be the case. So right now, top of mind here is let's get the rollover of this bar in 25 seconds and then see what happens on the next bar. Though then, on the 5-minute, this could become an issue. I mean, really, it's already only 40 points away. So, roll over here in 10 seconds. And then let's see what we get. All right, there's a nice push. Now again, the 5-minute 20 EMA that's an issue. That's an issue. We saw it reject earlier. It's definitely a psychological level. It has a lot of eyeballs. I would want to be clear of that before taking a bull bet. Listen, if you guys haven't done so yet, please press like on the stream. Helps out a ton. And I appreciate you doing so. All right. The bulls have 40 seconds left on this 2-minute bar. So this is what I'm watching. This is the 5-minute chart now, okay? So these are 5-minute bars. But this is a heavily watched EMA. And like it or not, I wish it wasn't relevant, but it is. It's not good enough for me to take trades off of on its own, but it's good enough for me to hold off of putting on a trade if we're coming directly into it, because I know that can be a source of bear hope. there are people, not me again, but there are people who get short right ahead of that. Just thinking, well, we held it once, let's see if we can hold it again. And, you know, that wouldn't be a horrible bet. I mean, I don't think it would be a good bet, but it wouldn't be a horrible bet. So I got to hold off. There's the 2-minute rollover there. I really only want to make a bull bet if we can see this close above that. Okay, but I got to tell you again, ideally, we would just see a rollover, 3 consecutive 2-minute bars here on this chart to the downside, and then I could look to hunt those stops at the low. That's my ideal situation. Let's see if we can get that. Well, now listen, another interesting idea here. If we can get the bulls pushing up and giving me a 2-minute bar close above 820 on one of these bars. I don't really care which one it is as long as the entry bar is large enough and not like this size. I mean, come on, you know that there's stops here. I'm always trying to get a setup coming right into some stops that I can hunt. Use as fuel to help push me to target. All it does is add to the setup. So this 2-minute bar has about 34 seconds left. I don't imagine we're going to see a setup on this one, but the next couple of bars I'm watching carefully. See if we can get something. Hey Shay, how you doing? Welcome back. All right, coming in at 20,800. Again, that's a tier 3 level. I'm not concerned with that on its own. And here comes the 2-minute bar rollover. There's the rollover. All right, now. Bulls, let's see a nice close, ideally, maybe 825. 825 would be a beautiful place to watch this bar close at. And then I would be buying the rollover. So let's see if we can push through that 5-minute 20 EMA. That's what I'm watching. That's number one concern right now. Benjamin, good morning. How we doing? Hey, Muhammad, no, I gotta hold off until we clear that 5-minute 20. Yeah, it was nice, but there's a point right in the way. All right, we've got a minute left, 60 seconds left on this 2-minute bar. And again, for me to take an entry on the rollover here, I would need to see this pop 20 points here in the next 52 seconds. Oh, bulls, come on now. You're killing my setup here. 15 seconds here. We can at least see this bar close green. They're going to shoot me in the foot. All right, here comes the rollover. Bear attempt at a little reversal sequence. All right, that's okay. Now, either direction, as far as me getting a setup, we're 2 bars out. So whether I end up taking a short or a long, whatever, we are always within, at this point, 4 minutes of a setup. right, this bar here is a bit indecisive. Here comes the rollover. And that's going to close as a very slight bull doji. Yeah, this market's trying to figure out what to do here. It really has two options right now. I mean, look at this version of the 2-minute chart. We could either curl and go test the lows, obviously. But the bulls are really, I think, you know, they're trying to prop this up so we can at least see a test of this flat top. These flat tops tend to get tested at some point and oftentimes break. Now, we're still far enough away where I wouldn't just take that bet blindly, of course. But right here, we got an argument going on. Chris, would you say that there is an argument for a descending resistance coming from the highs of market open to be made? Chris is talking about this here. Yes, there is an argument there. That's why I would need to see, if I was going to get long, I need to see the bulls push higher, and then I'd use this flat top for stop hunting. But in a lot of ways, I'd prefer we just head lower and I use the bottom, because that would be the true intraday low, the stop hunt. So if we can see a nice curl, a few consecutive bear bars, I'd slightly prefer that, just because this is the true low of day, and I know that there are a ton of bull stop losses down here. Still got an argument going on here. SK says, respect your patience to not FOMO into long or short. Yeah, I mean, listen, this is the job. The job is to sit and wait, and when a good setup presents itself, whether it's not at all on a day or whether it's 10 times in one day, I gotta put it on and accept the outcome. That's the job. I don't know, maybe I've been doing it long enough at this point, I don't like feel FOMO anymore. I don't care. If the market shot up 400 points right now, I'd more so just be concerned that it's going to ruin the rest of the day because we got a big tariff headline. It doesn't even hit my brain that I should hit the buy button. I'm more grateful that I'm not in a position when that kind of thing happens. Because it's too crazy. Yeah, Scooby, delete that trend line. I think you're holding the market down. Gain says, I'm gonna be 100. I def sometimes feel FOMO. I'm not that seasoned yet. Yeah, listen, I don't know. It's just, I don't know. I think the longer you go, the more you start to realize that every single candle you're missing out on money if you just made one specific decision. That doesn't make it a good bet to take, though. To me, I think about it like, well, you know, casinos exist. Like, that's like feeling FOMO to me is like constantly thinking, yeah, but that, you know, that slot machine, I could spin it. I'm missing out on money. But we all know that that's not the truth, because you understand that the edge is in the casino's favor. It's like, that blackjack table is calling my name, baby. Maybe I should drive over and sit down. Like, hopefully we're not thinking that way. If you do, you should, you know, GA is a thing. But that's how I feel in trading. Like, if the setup's not there, that's how it feels to me, and it feels ridiculous to think that way. So it doesn't even hit my brain. But I think the fading of FOMO realistically just comes with more reps. But this sideways action, we got to break one way or the other. Mr. V says facts. The more experience you gain trading, the less you feel the need to take every trade. There's always opportunity. Yeah, you know, listen, guys. I wish there was some kind of secret that I could sit here and say, do this, and then you won't feel FOMO. But I'm just gonna be real with you. The secret is reps. The secret is to sit and watch more bars. The secret is to sit and trade for more days. And the more candles you watch, the more you start to realize that on most bars you have no edge, and when you consider slippage and commissions, you have negative expected value, like sitting down at the slot machine, which we don't want to do. We want to do the opposite of that. We want to be the casino. But if you could only be the casino on a certain percentage of bars, at least for your strategy, then doing your job is waiting. If you're taking trades that aren't there, you're not doing your job. You're doing the opposite of your job. So, I mean, listen, part of that is being comfortable sitting in the red. Feeling really very, very different, whether you're break even, green, or red, because you know that number one priority is, I'm going to do my job today. This is my job. This is what pays, is waiting. Putting on good setups, being selective, understanding what your edge actually is and why you have one. And then just doing your job every day. Okay, here we are, getting a little bit of an attempt at a breakout. Now again, I really would love to stop hunt those lows. We're still about 80 points out from those lows. So we've got 57 seconds until the rollover of this 2-minute bar. Okay, now I'm getting interested here. Yeah, I'm going to be selective here. If we can get a nice low close, my profit take would be before the test of the low, so there really wouldn't be too much of a stop hunting mentality, but I would only put this on if we got a clean close. So let's see if we get that here. Wick back up currently. We'll get ready just in case. We got 10 seconds. Again, got to see a nice clean close at or very close to the low of this bar. Yeah, a little bit of a wick. I'm gonna give it one more bar. Same idea here applies on this bar, but that wick was a little too big for the first breakout bar on a continuation setup. So I'll give it one more bar here, and if we can get a clean close on this bar, then I'll put it on. Okay, minute 15 left on this bar. Let's see if we can get a nice clean close with a decent sized bear body, closing at or very close to the low. And obviously it would need to be below the previous bar's wick, but that's obvious with needing a decent sized bear body in this scenario. Bull's wicking us back up. All right, 40 seconds. John says, I knew that your style resonated with me when I found you 2 months ago. When I run the numbers with data post Nico, I know that my only job is to trade the setup and not move stops. Yeah, listen, your job is to not fall into the very obvious psychological traps. Everyone falls into the same traps. And in my experience, everyone that I've ever worked with kind of thinks that like they're the first person who's having these problems. And I'm sitting there and I'm like, if only, you know, we've all been there, and I've had every single problem that you've laid out, plus ones that you haven't even run into yet. We're all wired very similar, especially the kind of person that trading attracts. Here comes the rollover, by the way. Yeah, you see here the bulls. So that bar that I could have entered on and didn't, we got too big of a wick. It was the first breakout attempt. So I had to hold off and wait for a next bar, and here we are getting the bull reversal attempt. So let's see what we get. Again, from here, I would need to see at least this bar and the next bar in either direction for me to put on a trade. You know, but again, with the kind of people that trading attracts, we're all wired relatively similarly. Obviously, we're very different people, but when we're sitting at the screen, we do and think similar things. Okay, so you don't want to fall into the trap that everybody falls into at some point. And the difference is, do you grow out of it? Do you grow out of taking profit early because you're scared? Do you grow out of moving stop losses because you don't like the pain of getting stopped? And you're like, well, if I just... Oh, look, there's another support. I didn't see that one. My stop's at 25 points. Let me just move it to 50. And that way I can take advantage of that support level at 35 points. And then it dumps off, and you lose 2R on one trade when you didn't plan to. There's a million traps. Oh, you know, I lost 2 in a row. Let me just triple my size, and then I'll take a really good setup. Well, a really good setup is going to be at 1-to-1 reward to risk in the futures market. A really good setup might have a 59% win rate or a 60% win rate over a long period of time. You can have higher in short-term periods, right? But you're never going to get higher than 60% probability, really. Maybe slightly higher, but you're not going to get 95% probability on a 1-to-1 reward to risk. The futures market is too efficiently priced, so to triple your size to get that loss back, you're taking tremendous risk that you just dig the hole way deeper. Yeah, Jared says, eventually you'll be right if you don't blow your account first. Yeah, good old martingale. Problem with martingale is you don't have unlimited funds or unlimited drawdown. Martingale works in theory if you have unlimited money. But if you have unlimited money, then you don't need to make money. So it's a broken system. All right, 55 seconds left here on this bar. Let's see if we get a test of that little flat top. Vinny says, Wrench, I noticed you aren't super big on volume analysis. Could you elaborate on why you choose not to consider it? I consider it very much so on like a small cap momentum stock. It's very important. On futures, volume is so consistent. And yes, we're going to see variation, right? But it's so consistent and the market is so deep. I prefer not to spend precious mental capital on it. Because for me, I just don't think it's relevant enough to take up mental capital in futures specifically, for me. Now, if you do heavy volume analysis in the futures market and you make money, do it, 100%. There's a million ways to do this. All right, we got a minute 40 left on this bar. If we can get a nice clean close near the low and a rollover and a push and another clean close near the low, then I would sell the rollover of the next bar. Not this one, but the next bar. See if we can get that. Mark says, when I'm trading, I overtrade less and I feel less FOMO when I watch you because I see you sitting there calmly. Yeah, listen, Mark, it's coming. It's coming. And I mean, it's not an act. Like, just do the job. Do your job and leave. The more reps you do, the less, I really hate to say the less you care, because this is all about making money, providing for your family, which is all we care about. That's it. But, well, the providing for your family part, I don't want you to take that like all I care about is making money. No, like providing is what most of us care about most, aside from them themselves. But the more reps you take, the less you care about the individual outcome, because you have more confidence that the end result, the end goal, which is generating revenue and providing for your family, is set in stone when you have an edge that you can repeat consistently. Each individual trade, you care less. You care tremendously about the overall goal, but since it's more set in stone and you have more confidence that that goal is happening, that happens when I do my job, then how much you care about each individual trade goes out the window. You just don't. So it's coming. Just get more reps in. Still waiting for this to break one way or the other. Give me a nice little sequence. I'm really not seeing a whole lot of channel development. I mean, we're getting a small descending channel. It's not all that wide. Right, I mean, really, it's 35 points wide right now. This channel is kind of tight. I prefer to see this break one way or the other. Ideally, honestly, down so I can hunt some stops. All right, Bears, it's time to take us a bit lower, break out of this. Give me a good setup. Lee, I'm not going to take your bait today. You watch it, homeboy. Quick way to kill 20 minutes. Start getting me talking about PDT. Anti-American. All right, Bears, come on, take us lower here. SK, I'm looking for either a little channel scalp, 3 touch points plus, or a continuation on a breakout. Now, there's multiple factors, obviously, that go into it, which people seem to pick up on pretty quickly just watching the stream, which is kind of the whole idea here. Clark, do you make coffee before checking the charts? You know, I usually don't. So, my wife sets it all up before bed, and then when I get up, I walk out, and the first thing I do is, you know, read whatever note she left and press the button. And then, but I usually don't start drinking it until on stream, usually. What's up, Pumple? Good morning. John, you watch it, brother. Nico, how did you decide on 40-point target stop loss, for example? Why not 50? Also, going forward, how would you know when it was time to adjust? Thanks. It just became a sweet spot. I don't know. I mean, 50, based on the ATR, it seems a little bit wide for me. You can make 30 work. There's nothing magical about 40. I think it seems like some people in the chat are kind of set on like, well, you use 40 and that's why like the edge works. No, you can make it work with, 20, 25, 30, 37, 42. For me, 40 just feels like a good range. Sometimes, honestly, when the market slows, it's a little bit wide and I end up leaning into negative reward to risk, but I would do that anyway, even if it was 30 or 50. 40 just kind of put my, and by the way, the reason that I landed on 40 was because it put my average trade duration kind of right where I wanted it to be. Now, if you could widen out to 70, fine. But in a range-bound market, I think the probability probably goes down a bit, even if it's still 1-to-1, because, you might spend a lot more time in the range. The average trade duration is going to go way up, which on futures is not a horrible thing because there's no theta decay or anything, but it's something to consider. Now, why don't I run like 8-point stops and 8-point take profits? If I'm micro scalping, that might be something I'd think about, but like, let's be more extreme. 4-point stops and like 4-point take profits. The Nasdaq's too volatile. You just get chopped. It doesn't give you enough time to be right. I kind of feel like the minimum stop on the Nasdaq to avoid getting chopped is going to be somewhere between 10 and 20 points in most market conditions, even 10. I know a lot of people run 10-point Nasdaq stop losses and they get chopped out. And they never consider why is that happening. They just think they were wrong. They weren't necessarily wrong. They just didn't time it perfectly, which I don't want to have to time it perfectly. It's too hard. Still sideways here, waiting to see a breakout. One direction or the other. Again, I don't care, but this thing is sideways range bound right now. Very flat, which is tough. This is very 50-50 to trade. All right, I'll be back in a couple minutes. Don't go anywhere. All right. Come on, market. Let's break out of this little sideways garbage. Give me something here. And give all of us something. Can't imagine too many people are trading in this little range. Gotta tell you, we're within about 3.5 minutes of a great setup popping on. If we could get this turning into a nice low close at the low of this channel, out of that flat bottom, and then a rollover and a push down through with a nice close at the bottom of the bear body. I mean, that would be a beauty. All right, breaking downside, taking out a few of those stops. It's not going to be fully loaded with stops because it's a more recent low, but we just took some of those out. So good. Let's get a nice close. I would need to see a third bar just because this is the first breakout bar of this little sideways range. So we've got 34 seconds. Let's get a nice clean rollover, a push downside, and a close, and I would sell that looking down toward these lows. Let's see if we can get that scenario going. All right, here comes the rollover. Beauty. Now, this bar could end up being an entry bar for us. Let's see if we get something here. One sec. Come on now, Bears. Bulls are wicking us back upside here. Oh, again, this here is exactly why I need to wait for a second bar after the initial breakout. Because when you're in a sideways range like this, I need the bulls to just lay down. And a lot of times, one little breakout bar is not quite enough, and they still have some confidence to buy that back up, which is what we're getting. 40 seconds left. You know, this is turning into a sizable bull bar, but if we could see this reverse, I mean, let's just see here. Yeah, we got 17 seconds. Big bull bar close. Chris, this is what fascinates me about scalping. You can be bored out of your mind for 2 hours. 3 minutes is all it takes to get a nice, tasty setup. That's the way it goes. You're always less than 5 minutes out from a good setup. For me, the absolute furthest away I could ever be from a good setup is like 5-6 minutes. Okay, so take a look at this here. Show you both. I mean, every bull on the planet is going to draw that, right? I would think now you could draw this a number of ways. You could draw this like this, but more realistically, I think most people would probably draw this something like this. So let's see if that ends up being a thing. I mean, you look at the 5-minute chart, it's kind of aligning pretty damn close with the 20 on the 5. Now, as far as width, the width is there. All right, there's the rollover. Decent little controlled test. However, potential for a bull continuation setup, so I'm going to watch how this test kind of sets up. Because this is the strongest of all the tests that we've seen. Okay, so rather than just punching short, I kind of want to wait to see if this turns into a bull continuation, because then I would punch long. Yeah, I mean, you look here, clearly, this is the strongest test we've had. And here we are rejecting, so... Interesting. This is one of those scenarios where you have kind of like differing ideas, but I need more information. Because this could end up being a long setup or a short setup, depending on, I mean, realistically, with like a 20-25 point difference on the close. All right, we've got 57 seconds left on this 2-minute bar. By the way, even on that push through, we rejected off the 5-minute 20 EMA. Let's clean the chart up a little bit. I don't like too many lines. Okay, 27 seconds out. Let's see how this rolls over here. Yeah, so if we get a close like this in this region here, we get a rollover and a push up and test. I would take that little channel scalp to the short side if we see that here. That's a good setup for me that I would need to put on. Let's see if we get that. Looking for a test of about 20,790-ish. And I will take that trade. All right, so we are now sitting short with that little channel. All right, average price 20,790.75. Take profit down to 20,750.75. We'll see if we have room or if we have to manage a little early. We'll see. ATR is slightly below 25. And stop loss is currently up at 20,000. Well, it is up at 20,830.75. Currently about 4 points in the money. All right, also see if we can get a nice fade and maintain that little channel. Now, by the way, another factor here is my take profit at 20,750.75 is just below that little curl bottom, right? So, I mean, those stops down there are going to be good for at least a 5-point push, which would push me to target. So all I really need is to see a test of this low here and not see this test end up being the big bull breakout, which again is a good probability. So cool with that trade, leave it on, accept the outcome. Yeah, Pumple, I'm not going to rate trades because then people will just start taking them if I rate it high. And I really don't want people just blindly following me. Not into it. All right, here's the test of the 20 EMA on the 5. By the way, it's at a few points in the red as it currently sits. All right, bulls still, well, bears, I should say, still kind of really trying to hold off on that 20 EMA on the 5-minute. And I'm sitting a couple, like, basically break even on the trade. There's a test of 20,008 tier 3 level. Again, not concerned about that level on its own. Not too bad of a close out of the bulls. Again, that's not a setup I would put on long if I were sitting flat, because there's really no consecutive bars. So, plan says let it work. All right, now ATR is currently sitting at 20. Okay, so ATR is falling. All right, so on this trade here, I am open to managing negative reward risk if necessary. Again, that becomes higher and higher probability that I would manage a little early with again, leaning heavier and heavier into negative reward risk as ATR falls. 20 is still, 20 is not too bad, but it's coming down. So we'll see if these bars continue to fade as far as point range. Yeah, this is our good luck song, huh? Alright, still sitting a few points in the red here. Bulls and Bears kind of arguing over that 5-minute 20 EMA. But again, I just got to let this work here. Again, ATR, as it falls, it's now below 20. We're at 19.5 on the average true range. So leaning into negative reward to risk is on my mind here, if we come to that. Well, back to green on the trade. If we get a bit of a push. Now again, with ATR being what it is, I'm thinking about managing on the break downside through 20,770 if we see that. So yeah, I'm looking at a break of 770. I'll plant the take profit at 769 and a quarter. There we are. And we are fully out there for a winner. Okay, now that trade, I got double size. Okay. Now, that worked out fine because I'm leaning into negative reward to risk. But that was a error on the, I don't think it was the copy trader. I gotta tell you, I think it was a Ninja Trader issue. So that trade actually puts us essentially break even. I'm green in a few of the accounts. I'm red in a few of the accounts. I'm not really, I think it's important to mention that early management is not done for me based on P&L, okay? It's based on average true range, which at the time was at 19.5. Now it's at a 20.7, which is still low. Below 25, I start leaning into negative reward to risk. But that's where I sit. So total P&L, well, actually here, I can just show you. Total P&L, we're down 145 bucks because of slippage and commissions, which are factored in here, at least for the most part. But that's break even. Because again, 1R for me is 3,500 bucks. All right, so not done. Let's see what else we can get here. All right, now as long as we hang on to this channel here, I would continue to lean heavily into negative reward to risk. Again, on that last trade we got, let me think, I think we got 21 points, which is a little more than 1 to 2 reward to risk, which is great. But if this ATR stays below 25, which currently it's at 21.5, then I'll continue to lean into that unless we see a breakout of this channel and ATR start to increase. Okay, so as far as this, let's clean up our charts here. I'm gonna leave this. Now with a descending support, again, I'm not big on buying descending supports, especially when they start getting more aggressive. Really calm ones like this, I'm a little bit more open-minded to buying a descending support like that. But honestly, I'd much prefer to just see a bear continuation down through so I can hunt some of these stops. Now, as far as getting double size on that last trade, let's take a look. Yeah, I think my key's stuck. All my settings are right. Now, again, these are the kind of things, guys. Now, this is a conversation we should actually have. That kind of stuff, it's going to happen on any platform, by the way. This can happen on Lightspeed. This can happen on NinjaTrader, Thinkorswim. This can happen, hell, this can happen on Robinhood. If you end up with something happening that you didn't necessarily mean, like, oh man, I have twice as much size as I should. I trade small enough, especially here scaling horizontally. I mean, look, I'm trading small per account across all these accounts, but my 1R is 3,500 bucks, which is, that's not nothing. So scaling horizontally, you can get to the same place and trade small. And then when that kind of thing happens, it doesn't matter. You work it into your data. It's a one-off event. Had that ended up being a loser, fine. It doesn't matter because I'm trading small per account. Now, if you're someone who's scaling vertically, and let's say you have 1, 2, 3 prop accounts and you're trading big, when that glitch comes and you accidentally have double size, that's a huge problem. You lose that trade, the account's gone. I lose that trade, I just lose an additional 1R, which is not a big deal at all. Again, another argument for scaling horizontally. Now, you could say that, well, the copy trader has more problems, though, with the more accounts that you have. That wasn't a copy trader issue. That was a NinjaTrader problem. I have my base account set to 1 micro, which the copy trader then multiplies for each account, and it filled me with 2. So what I think happened is I think my hotkey stuck, which is going to happen. Part of the game. But now here we are on this channel. Again, with the way that this channel is developing, it's kind of expanding on both sides of the ball. Descending support, arguably a flat top, or we could maybe start arguing a little ascending resistance. I'd prefer to see this just break out and then go continuation. Yeah, Jay, I've been flat for I announced when I got out. I've been flat for minutes. Showed the P&L too. See if we can get a sequence going here. What's up with you guys? How you guys doing today? Not that I'm big on focusing on the result. I'm big on focusing on process. Result takes care of itself, but that's a better question. How's your process going today? You guys trading your plan? I don't want to hear that you're breaking your own rules. Chris, no trades so far. Hey, that's okay. Mio up a little. Zach's break even. Chris K is up on his evals, down in the funded accounts. It's okay. Debo up a few nice trades. Scrumptious down bad today. Don't do it, Harrison. All right, we're getting some consecutive bull bars here. Now again, take a look. Take a look. There's going to be a big range, right? I mean, really, arguably, you could draw that from there all the way up here. But we've got about a 10-15 point flat top. Now, if the bulls can get a nice continuation sequence pushing up out of there, I would not be against getting long. Because, you know, honestly, I just want to get out of this big channel. One way or the other, I don't care. Michael says, so okay, so if I made $300 today on Apex eval, what would be the 30% rule going forward? Can I only risk 90? So on Apex evaluations, that's not a thing. That's not their business model is essentially they don't care too much about what you do on the eval as long as you pass without hitting the trailing drawdown. But on funded accounts, if you make $300, let me put it this way. The 30% rule is only based on your profit once you exceed the original drawdown, if that makes sense. So if you make $1 in an Apex funded account, the 30% rule would technically say you can only risk 30 cents. That's not the case. You have to cover the initial drawdown for your profits to take over with the 30%, if that makes sense. It's obviously, it makes more sense to do it that way, which is the way it is. So within this little channel here, I gotta see this break one way or the other. Again, still looking here. We'll see it break one way or the other. Dieselman, I have 4 accounts, 2 25Ks and 2 50Ks. Do you recommend me linking them? I usually trade them individually, but it's not easy taking all those trades and being green. Yeah, listen, if you're a micro scalper who takes 75 trades a day, which is fine if you have edge, by the way. Everyone says, oh, that's over trading. No, we don't have enough information to say that that's over trading. If they have a reasonable edge, a reasonable expectation of edge on all 75 trades, then shouldn't they take all 75 trades? Should the casino only deal you 2 hands of blackjack and then call it quits? No. Right? Now, it's just differing business models. Someone who's like, I show up every day and I just try to take one trade a day, that's pretty low. They're probably going to have more edge on that one trade than a scalper would have on all 100 of their trades throughout the day. Less edge, higher quantity of trades. But as long as you have an edge, you should take the trades. So to answer your question, if you're a micro scalper who takes 75 trades a day, you can trade them individually if you want. But if you're someone who takes one, 2, 3 trades a day, maybe think about copy trading them, or at least copy trading them in 2 sets. All right, let's see if the bears can break this out lower. Again, I'm watching that top right, well, really on both the 2-minute and the 5-minute. See if we can break downside through, and then I would toss on a nice little continuation sequence if we get it out of the bears. Nico, how do you keep track of the trailing drawdown of different sizes of the prop accounts? I got stopped out twice last week because of that, and 2 winning trades became losing ones. Higher high, I gotta be honest with you, it sounds like you're trading way too big. If you're having trouble keeping track of the trailing drawdown because it's just so chaotic, you're probably trading way too big. You should be trading small enough where it only becomes a problem when you're like aware. Because you're on such a losing streak that you start checking, well, like, you know, I've lost 7 trades in a row. Like, I gotta be getting close, right? Now, on evals, obviously I trade evals much more aggressively. I just keep track in my head. I know my size. I know how many dollars per point my size is. And I just run a running tally in my head while I'm trading the evals. Tubed Out says, I would want it to touch the upper range and then go short. Yeah, for me that flat top, I would... Those flat tops tend... You guys know how I feel about flat tops. I'd prefer to go continuation through, breaking through the flat top if we could get that. But I'm also cool continuation to the downside if we can break that little descending support. By the way, listen, Apex 80% off is not going to be around all month. Okay, so right now it is 80% off single day pass, which is the second best deal that they're ever going to run. The best deal is 90% off, just for context. However, that comes around very rarely. 80% off is plenty to make the numbers look good for most business models. Use code BIG. That'll give you the best deal always. All right, let's see if we, wow, we're inside of this little sideways range. We got to break out one way or the other here. Again, I do not care which way we go. It's even more brutal when we look at that 5-minute chart. Look at that, huh? Higher High says use the code BIG to open several static accounts. No real-time trailing drawdowns for those. Yeah, listen, some of my Apex accounts right now are static accounts. I love the static accounts. I will say though, they have a slower start because you only have like $600 a drawdown. I think it's 625. And you got to abide by that 30% rule to start. So you're trading really small to start and you slowly scale up. They also max you out at two minis, which I don't even get to. I just trade the micros. So I think the statics are overlooked. I like running a few statics at all times. But for your first account, if you're looking to maybe not have to scale so slowly, the 50K is probably a good place to start with the trailing drawdown. But if you're like, man, I cannot stand this trailing drawdown, I can't make it work, give the statics a shot. They're different, but it's I don't know. It's not worse, it's just different. I like it. Yeah, Pumple, 2 minis, that's way too big a size, even on that. I think starting those statics with 1 micro is the way to go, and then slowly scaling. Man, look at how... Look at this. That chart is... That's an ugly chart. Look at the 5 minute... Oh goodness, just non-stop wicks. Again, gotta see this break one way or the other here. One sec. Yo, this is just flat bottom city, baby. Look at this. You could draw a bunch of flat bottoms. I'd probably put one there. Listen, you guys, some of you guys might be like, I make all my money in flat ranges. That's fine. For me, this is a great way to get suckered into a lot of bad trades. This little sideways flat bottom, flat top action, I need to wait to watch it break one way or the other because this here is 50-50. When it's a flat top and a flat bottom, kind of worst case scenario, at least for me. Having a flat top and maybe like a descending support is a little easier to trade. Maybe like a flat bottom descending resistance. Even a little bit better. But this here, this is... I gotta wait for it to go one way or the other. All right, guys. Well, as far as news for the rest of the day here, what do we got? We're pretty much clear for the rest of the day. Again, always be on the lookout for random tariff headlines. Always be running, at least in this market environment, live stops. live stops. So we'll see. Maybe I'll trade the afternoon. We'll see. Again, 1 hour for me is $3,500 right now, and we're sitting down 145, so we're break even on the day. Again, we'll see if we get any good setups here through the afternoon. Guys, take profit trader, currently still 30% off. No activation fee. That's a big deal. If that deal goes away, the activation fee doubles the full cost of actually getting funded. You get 30% off the test fee, and then when you pass, you don't have to pay anything else as long as you use code BIG, which is a big deal. Daily payouts as well at Take Profit, which is obviously a big, nice asset to have, those daily payout accounts. All right, guys, I'm live every day, 8:15 a.m. Central. I will see you here tomorrow morning. If you're not yet, please subscribe to the channel, and I'll see you back here tomorrow right before the bell. All right, guys, I'm off. Have a good day. Stay disciplined. Let the market come to you. Don't do anything dumb. Okay? Trade well. Don't worry about the result. Trade well, and it'll come. All right, guys. Have a good one. See you.